Hello you awesome people, this is Krunal from Ebizfiling.com and I'm back with another informative video for you. First of all, I would like to thank to all of you for showing so much support and love to our channel. And those of you who are not subscribed, please like, share and subscribe, and also hit the bell icon to get notified in future for any such other informative video. So today we are gonna talk about TDS, that is tax deducted at source. So basically, TDS is deducted on any payment that exceeds a specified limit. But however, since the introduction of Finance Act 2020 in the Budget 2021, a new section was introduced, that is Section 194Q, which requires us to deduct the TDS on purchase of goods exceeding a specified limit from a resident individual. First, let me explain you the concept of TDS or tax deductible at source. So friends, TDS or tax deductible at source is basically an amount which is deducted on the payment made by any person or the company under the Income Tax Act. Basically, TDS is deducted on the threshold limits which is provided under the Act, and now this also includes the payment on purchase of goods. So with the insertion of Section 194Q, if any person purchases goods, TDS has to be deducted on it above a threshold limit. So Section 194Q says that any person being a buyer who is responsible to make payment to any resident individual, which is hereinafter referred to as the seller, for purchase of any goods, the value of which in aggregate exceeds Rs 50 lakh in any previous year, shall at the time of making payment or crediting such amount to the account of such buyer deduct an amount equal to 0.1% of the amount in aggregate of Rs 15 lakhs as TDS. So you must be wondering what would be the applicability of Section 194Q on your business. So don't worry, let me put in the words for you. TDS under Section 194Q is to be deducted subject to 4 conditions. The first one of which is that the seller must be a resident individual. The second one is the aggregate value of goods or the total value of goods purchased shall be exceeding Rs 50 lakhs in any previous year. The third one is the purchaser should have a turnover of exceeding Rs 10 crore in the previous financial year. And the fourth condition is that TDS should not be deducted under any of the provisions of the Income Tax Act 1961. So now let's discuss the timeline for deduction of TDS. Basically, the tax shall be deducted at the time of crediting the amount into the account of seller or at the time of payment of the amount to seller, whichever is earlier. The second thing is the tax shall be deducted even if the amount is credited to the suspense account of the seller. So guys, the new provision of Section 194Q are only applicable on the purchase of goods and not services. This section has its own pros and cons. In spite, the government has fixed the rate at 0.1%, but the tax burden is there and it is to be deposited to government in advance every month. However, this will result in another compliance burden to the companies and persons who are doing their business. Well folks, that's all for today. If you need any further assistance, query or help in incorporating new businesses in India, getting foreign investment, completing your compliance requirement, just drop your queries with contact information in the comment section below. Our team will reach you at the earliest.